Welcome back to Truck Tech. It's another Wednesday. We're happy to have you with us today. New show today, new topic that we haven't really talked much about, and that's lidar. It is one of those critical enabling technologies for autonomous trucking, as well as all autonomous vehicles. And as we'll find out today, there's a lot of other applications for it as well. Our guest today is going to be Angus Pocola, who is the co-founder and CEO of Ouster Incorporated. Ouster is one of many lidar providers, but Ouster appears to be in a pretty good position, albeit with some financial challenges that we'll get into with Angus. And we'll also be visited today by one of our favorites, Sam Abel-Samid, who follows the lidar industry very closely for Guidehouse Insights. Before we get to them today, let's talk a few headlines. Interestingly enough, Volvo Trucks was out today with an early read on its first quarter earnings. Those were a surprise, a positive surprise. Volvo had pushed out the idea that maybe the ongoing supply chain disruption and some of the hangover effect of COVID would dampen first quarter earnings. The opposite seems to be the case. In the preliminary numbers today, they are up quite a bit, and the market reacted very positively. Earlier today, it was trading up 8% for the Sweden-based company. We will find out whether this is just an anomaly or whether there's more to it when we look at the other truck makers, public truck makers, in the coming weeks. We're also looking today at some news from Embark Trucks. This isn't happy news at all because the whole Embark story is very sad, and that is, they laid off 70% of their workers from the autonomous truck startup a few weeks ago. Now we find from looking at SEC documents that co-founder Brandon Moak has left the company. This is sad because Brandon and his co-founder Alex Rodriguez have been together since college working on these technologies. The details are inside the SEC documents, not really easy to sort out, but it is a departure that, probably a little surprising, but maybe not. I mean, this is a situation we're going to have to keep watching after. Finally, the American Transportation Research Institute is out today with some new information and a new study on just what driver-facing cameras mean to the industry. Obviously, driver-facing cameras are not popular with drivers. In fact, only about 2 out of 10 think they're really a good thing. This is something that ATRI, which does a lot of work for the for-hire trucking industry and a lot of studies and so forth, has decided that this is an important research priority, and therefore they have come up with some suggestions for maybe how to make this more palatable to the rest of the industry. We are now ready to begin the show, and let's welcome Angus Pocola, the co-founder and CEO of Ouster. Angus, before founding Ouster in 2015, was a director of engineering at Quanergy. He started that in 2012 and stayed there till 2015. Before that, he was a battery engineer at Amprius. Angus and I first met about 5 years ago when he was part of a group of lidar companies that was assembled to tell their stories to several media here in Michigan. Angus, I don't know if you remember that, but I do, and want to welcome you to Truck Tech.
Alan, thanks for having me. I definitely remember that event because I think I was there on my own. Just to give you a sense of how early Ouster was, I was there on my own, had rented my own car to demonstrate our technology live, and I remember meeting you there. It was a great event, but definitely the early days for Ouster.
Well, and a hat tip to Scott Fosgard, who put all that together. Scott was a colleague of mine at General Motors a few years before that. And so that was the first time we met. We've talked a number of times since, and it is really good to have you on the show. This isn't a really easy time, and it's not an easy topic these days. You know that. And I appreciate the fact that you did not push back on the idea that we might have some tough stuff to talk about. Obviously, these are things that have been in your SEC filings and so forth. I guess, but before we get into any of that, I'd like you to sort of take the audience who may not be super familiar with LiDAR and how it works, just a very quick layman's description, if you will.
Yeah, absolutely. And, I like gritty topics. The LiDAR industry is a competitive industry. we've been in this industry for a long time, and to succeed, you got to be able to tackle the good and the bad together. So, but anyway, so lidar technology. Lidar stands for light detection and ranging. And it may sound familiar because there are other detection and ranging technologies like sonar, radar, and echolocation, even with bats. But basically, LiDAR is the eyes of all modern autonomous machines. LiDAR is a sensor that emits light, bounces it off objects, times how long it takes to return to the sensor, and then can estimate the range to those objects in the environment. And with that information and doing that millions of times a second, sending out these pulses in all directions, that you can build up a 3D sense of the world, which allows a machine to navigate. And those machines could be, many different forms. So commonly, we're on the show, you talk about robo trucking, companies like Embark. We're using LiDAR to build automated trucks. There's automated robo taxis, but there are so many other use cases for this because LiDAR is the single best sensor for giving a machine eyes. And so you see some images of automated forklifts, of smart agricultural vehicles, of mining machines, of drones doing inspection. There are really just an immense number of applications for the technology. And LiDAR is the key enabling sensing technology for this new wave of automation and autonomy technology. So hopefully that gives a little sense of the broad reach of LiDAR technology as it emerges as a more affordable technology in the space.
Well, Angus, it absolutely does that. And I think, you sort of gave me the great segue here because, when you look at the way Ouster is doing business, you're not just focused on automotive. You've picked really three other areas: robotics and smart infrastructure. And what's the other one? Industrial. To work LiDAR into. So I'd like you to sort of tell me, was that always the plan at Ouster, or did you sort of say, wait a minute, automotive isn't going to be enough?
Yeah, it absolutely. From Ouster's founding, we've really had two key pillars of the company. The first is the digital lidar technology that Ouster invented and have built our entire business around. And we can get into the details of that digital lidar technology later if you want. But the second was diversification. So diversification into four key verticals: automotive, industrial, smart infrastructure, and robotics. And we're actually able, the reason that we've diversified is not because automotive is not enough, but really because of two things. First, there's a much broader opportunity and an opportunity to build a bigger, healthier, faster growing business by diversifying into these four industries. And that's the reason that market exists is because of what I explained earlier. LiDAR is a key enabling technology of autonomy and automation, broadly speaking. For any type of big, powerful machine, it doesn't just have to be a truck or a car. It can be a mining machine, it can be a combine harvester, and it can be an automated forklift or a drone. All of those machines benefit from LiDAR technology or are enabled in the very first place from getting the eyesight from a LiDAR sensor. So a bigger market that's faster growing and diversified builds a stronger, healthier company. Ouster is one of the largest LiDAR companies in the world and fastest growing as a result of that diversification. But in order to pursue that diversified approach, it actually comes back to that digital technology that we founded the company on. We intentionally built a technology that we felt could serve multiple markets. And digital technology, traditionally, if you look across other industries, digital technology it plays across markets because it's more affordable and it's more performant. And that's really what we're offering with digital lidar sensors: more affordable, right, more capable sensors. And so that's enabled this whole diversification strategy.
Very good. Competition is fierce in LiDAR. And earlier today, Ouster sued Shanghai, China-based Hesai over patent infringement. Now, I don't want to make light of this. It's a very serious case. But it seems that legal squabbles kind of come in the LiDAR space. I mean, at one point, Velodyne, which is now part of part of Ouster, sued and apparently prevailed against Hesai. Velodyne actually sued you before it merged with you. So it seems that these things come up from time to time. I'm not sure that there's a reason for that or there's a way to describe it or explain it. But for this discussion, let's just say you're the surviving name for two one-time significant players among dozens that are in the LiDAR space. Merger with Velodyne, I presume, did put some pressure on an already challenged balance sheet at Elster. I wrote about some of this last week in Truck Tech in the newsletter. And you're certainly not alone. And I don't want to single you out here either in terms of facing financial challenges among tech startups. So maybe tell us, how's the Velodyne absorption going at this point?
Well, I actually think, there's challenges growing any kind of highly competitive hardware business, and lidar is not different, and Ouster is no different than many other industries in that respect. But I would say that the merger with Velodyne has put Ouster in an extremely strong position. For a number of reasons. The first is just the financial underpinnings of the business. As a result of the merger with Velodyne, at the end of last year, the combined companies had over $315 million in cash on the balance sheets of the combined companies. We now have over 850 customers worldwide, spanning 50 countries. We've shipped over 90,000 sensors worldwide. So we have a significantly expanded customer base, an expanded product portfolio, and a significantly strengthened balance sheet that are the result of this merger. And now we're on a path to reducing our costs through up to 75 million, actually more than 75 million in cost synergies by combining the two companies, which gives us all of the financial kind of backing and health that we need to continue growing the business and being one of the major players in the industry. And that really is different than where many of these lidar companies are right now. Most lidar companies are in a much less secure financial position and also have de minimis revenue with negative gross margins, which is absolutely not the case for Ouster. Ouster now has strong positive margins on the digital lidar products that we sell, and again, growing revenue. We did 41 million in revenue as a single entity last year. So I think we're on the right track, and we really have distinguished ourselves with this merger. But we have work to do on the synergy side.
Sure. Well, and I won't ask you about product overlap because I think you sort of addressed that. I had it as a question, but you answered it. So let me ask you, though, you did mention in your 10K.
What I would say there, no, sorry, it's on the product overlap, it's much less about product technology overlap and more about building a bigger customer base. The merger allows us to build a bigger customer base. And whether customers use Ouster products or Velodyne products is not something that I have to dictate. This is giving customers the option and building a bigger overall revenue base for the company.
And I think you told me that the Velodyne name does continue on products, or will they eventually become all Ouster products? How are you doing that?
Yeah, well, the surviving name is Ouster. The name of the company is still Ouster.
Right.
The Velodyne products are still marketed under the Velodyne brand, but there are no new products that are being released under that brand.
Gotcha. Okay. So as long as there are relevant applications, then they will be out there. You mentioned in your 10K, Angus, that among the business risks, and there's a lot of them that are boilerplate, I know that, but you did say that other players are better capitalized. Now, I will not guess at who you're talking about. I think I know, but how concerning is your share price? And I realize you can have pretty good underlying financials, but the market still may not like you. I mean, looked earlier today, 47.5 cents a share and a market cap of 186 million. It sounds like you may have twice as much cash practically on hand, or did have anyway, as your market cap. Again, you're not alone, but maybe you can walk me through what that means to Ouster.
Yeah, and I wouldn't spend too much time looking at the 10K language. There are potential concerns, business risks that have to be filed and that are potential risks in any 10K filing. I think that Ouster is in a strong financial position, but that doesn't mean that I'm happy with the stock price. Our shareholder base has felt immense pain over the last year from a declining share price, and we have to correct that. And I think there's been some near-term volatility because we just announced a 10-to-1 stock split as well, and so there's market uncertainty around just the general outlook for Ouster. But I would highlight that what we have put forward with the merger shows that we can be a financially secure, strong, and growing company with a strong balance sheet through the cash that we have on hand and the synergies that we've identified and that we are on track to complete by the end of this year. So, yeah.
I'm sorry, you said 10-to-1. I think you mean 1-for-10, right? I mean, the reverse.
No, excuse me,
reverse
1-to-10. Yeah.
No, that I've gotten that wrong myself. So I've been corrected on once or twice. I'm not trying to correct you. I know that the board had the ability to do either a 1-for-5 or 1-for-10. We wrote that last week, and apparently that's happened. I haven't looked at your filings today to see, but apparently that's underway. Do you, there's other levers that companies are pulling right now. It can be at the market. It can be a lot of things, to raise capital. Are you in a position of needing to do that? Or do you think you have enough to keep the business on track right now?
Yeah, we're really focused on taking advantage of the merger and the company that we have today, and that really, the cash is now combined between the two companies. It's a strong balance sheet, and we need to make the most of it through the cost synergies that we've identified. So, as part of the merger, we announced that we had identified $75 million worth of synergies between the two companies that we could pull out of the combined entity. We are on track to do that. As of the Q4 earnings that we had last month, we said that we were on track already with over 50 million of that 75 million in synergies, and that we were looking to expand upon or beat that $75 million number. So we really want to put Ouster in a position where, without further cash influx, we are on a strong path of growth towards, with an eye on profitability. And that is really very different. Importantly, it allows our stock price to, we don't want to have more dilution in the stock or anything like that. We don't need to do that, which sets us apart from many of the lidar companies in this space that are facing kind of a cash crunch in the next year.
All right, we're gonna talk about that in just a moment when we bring in Sam Al-Samid. I know you know Sam and he knows you, so the three of us will have at least one question together. I want to ask one more question though. You seem to indicate, and I just want to pin you down on this a little further. You seem to indicate that you've got enough to go for what, another year, 2 years? What kind of runway do you feel you have at this point? Through the merger and through the synergies that you can get? I presume that means a lower cash burn, but you'd have to tell me that.
Yeah, I mean, this is all about hitting the synergies. Again, we have the resources on hand. As long as we hit the synergies and beat the synergies that we've outlined, we're in an incredibly strong cash position, but the market hasn't seen that yet, right? And that's one of the problems with the stock as it exists today, and it's something that I understand. We have to show that we can save the money that we've said and beat the 75 million in synergies. And with that, Ouster will be in a very secure position, and we'll have lots of flexibility on how we manage our assets going forward.
Okay. Well, they used to call that on ESPN the Budweiser hot seat. So I'm gonna let you off that for just a moment. But I'm going to bring Sam on in with us now. Sam, if you can come on in here. Great to have you back. I enjoy it. I'm always more relaxed when you're on the show for some reason, because I know you have forgotten more than I'll ever know about most of these topics. So I really appreciate having you here, and Angus is with us as well. Really just one question. I'd like you, Sam, if you would, to sort of give us your take on the lidar space. It's very crowded, and it has been very crowded. And maybe it's becoming less so. Maybe you can take us through that.
Yeah, as you said, it has been more crowded in the past. It's starting to get less crowded, and I think it will get significantly less crowded over the next 2, 3, maybe 4 years. There's quite a few companies that are in a very tight position and will probably end up going away before much longer. That said, we're also right at the point where lidar is really starting to gain some traction obviously, companies like Ouster have had a lot, some significant success in the non-automotive market, and we're starting to get some serious traction in the automotive market as well. We've seen GM recently released some details on their upcoming Ultra Cruise system later this year. Last week at the New York Auto Show, Kia showed off their new EV9, which will have an optional driving assist system that features lidar sensors on there. There's a lot of vehicles, quite a few vehicles in the Chinese market with various lidar sensors. Volvo and Polestar bringing lidar later this year. So we're just at the stage where, in the next 24 months, we're going to see quite a few new vehicles offering lidar equipped driver assist and partially automated driving systems.
All right, and that of course gets to the car space and the passenger vehicle space. Can you quickly bring us up to speed on what you see in the truck area? I know a little bit here, but I'd like to hear if you've been watching that as well.
Yeah, the truck area is having some challenges. Obviously, you talked about Embark earlier. Also, Waymo seems to be pulling back on their automated trucking efforts. Sounds like a lot of their recent layoffs, most of their 200 layoffs that they had earlier this year, were in their Waymo Via group. And sounds like they're focusing more on their light duty applications right now. Aurora, which is another one of the leading players, at least in terms of their technology development, is they're facing a cash crunch as well. And I think there are quite a few others. One interesting player that is seemingly coming out of almost nowhere is Gatik. They're more in a medium duty space, and they're focused on middle mile delivery, and they just recently announced a deal with Kroger, another customer for them. They're actually planning to almost double their staff by the end of this year. So they seem to be having some actual success. One of the few in the trucking segment.
Right. Well, and I know that, one of the examples, Angus, back to you, and we didn't really talk about it, your suit today, both in Delaware and with the ITC, seeking to stop Hesai. I mean, one of their customers is Kodiak. It's very, very apparent on their trucks, right now, including the 5th generation system that they showed last week. Did you want very quickly to comment on the suit and on this matter? I kind of went through it and then didn't give you a chance to say anything.
Absolutely. I mean, I think that, you mentioned at the beginning, Hesai is actually, this is now a trend. This isn't the first lawsuit that's been brought against Hesai specifically. Velodyne previously, a couple of years ago, brought a suit against Hesai and settled out of court, and that resulted in ongoing payments from Hesai to Velodyne for the products that Velodyne had claimed infringement over. And now here we are with Ouster having filed today with the ITC claiming infringement on our core digital lidar technology. And this is covering the majority of the Hesai products. This was really spurred by the infringement that we saw in combination with recent public information in Hesai's prospectus before they went IPO, and as well as information they put out around CES showing their kind of intensified interest in Ouster's core digital lidar roadmap. And we felt that we had no choice at this point but to file this case with the ITC. So this is a big step that we had to take.
Okay, Angus, I've got about a minute left here. I want to get you out of here on this. You heard Sam's description of what's happening with lidar. Are you buying it? Is that how you see it from the automotive side? Because that's really what he addressed.
I mean, I absolutely agree that lidar is starting to be adopted within automotive, and I think generally that lidar and adoption is contingent on broader systems and machine learning and algorithms and testing being ready in these systems that have adopted lidar. And that's taken the better part of five years for many of these companies that Sam mentioned to get to a point where we can start deploying it. GM with the Ultra Cruise system, good example. They announced that system years ago, but it's only through years of testing that now they're really on the cusp of deploying it at scale. So we see that in automotive, and we see that very broadly across our diversified set of customers in industrial, smart infrastructure, and robotics. So I think the future is incredibly bright for lidar adoption, and that goes back to why there's so much competition in this space, is because we are on the cusp of something extremely big.
Right. We're going to leave it there, guys. Great. I'm glad you agreed, by the way, because I would hate to have, fights break out on the show. I thought it was pretty clear you were going to, by the way. So Sam and Angus, thank you both for being here. Folks, next week on Truck Tech, our scheduled guest is Aurora Innovation co-founder and CEO Chris Urmson. We've not talked with Chris before, so that ought to be pretty interesting. And of course, Aurora has been making some news lately, and we'll actually have a story tomorrow on some advances that they've got coming up on the autonomous terminal side of things. This Friday in the Truck Tech newsletter, we'll look at preventive maintenance for autonomous trucks. We will see everybody next week. Thank you very much for being here.